I can see Ecosperity is very much alive, which is a very good sign. So today, I'm Luca Tonello, so I run sort of energy and infrastructure for SMBC in APAC, and sort of my job involves sort of providing capital and advisory across energy and in infrastructure, and so we do come across a lot of opportunity in this part of the world, and I'm joined by Eric Becker, who runs basically similar to my job for IFC in Southeast Asia. And so we're going to have a conversation around opportunities, challenges, and also particularly how we can better deploy private capital and public capital to come together, to address some of the challenges that we are facing in this part of the world. Maybe as an umbrella, I will let Eric to make some introduction and introduce himself, but the umbrella theme is really in this Southeast Asia region, and not just in Southeast Asia, but South Asia, the dependency on fossil fuel is still very, very high. And notwithstanding the fact that there's a lot of capital going every year into projects, there is the decarbonization path, there are commitments made by countries to decarbonize the economy. The reliance on traditional fossil fuel is still very, very high. So the opportunity in terms of social impact, but also in economic terms, is still quite large. And we have seen global investors in the private sector now refocusing capital also in this part of the world and in emerging market, combining catalytic capital, which is capital that has a maybe lower return threshold, to facilitate some of the transition story. So before we go into the details, I think I should let Eric, and first of all, thank you for joining us. IFC has been a big partner of SMBC in financing and providing capital in this part of the world, so very happy to have him here. And why don't you introduce yourself briefly?
Yeah, good morning, everybody. My name is Eric Becker. I'm based here in Singapore as well, so I could walk here this morning, and my office is just there as well, so super convenient here in Singapore. Very happy to be here. Most of you know the IFC. We're the private sector arm of the World Bank Group, so that means we finance infrastructure projects all over East Asia Pacific, and we finance them alongside private capital, and we are focusing on the private sector-led initiatives and projects. Myself, I just moved here last year. I came from Dubai, where I was for the last 8 years looking after Africa and the Middle East and North Africa region. So I've seen a lot of energy transitions going on in various parts of the world, and really looking forward to discussing it today here. And I agree with Luca that there is a lot of work to be done still, but that's why we're here.
Thank you, Eric, and welcome to Singapore, even if it's not that recent. So I think we summarize maybe 5 broad areas of discussion today. Why don't we start from an overview on where we are, right? What's your assessment? I mean, I already made some statement around dependence on fossil fuel, etc. But what's your observation coming into the region, and maybe even in relation to other similar parts of the world, given IFC as a global reach? What's your assessment?
So I'll give you two sort of data points from last month. So I attended a major private equity conference, a global private equity conference, and spoke to a lot of investors, and essentially Southeast Asia, not even East Asia, but Southeast Asia was at the forefront of their investment focus. So I think that speaks for the dynamism of the region, for the growth potential, and for the willingness of the rest of the world to basically come here and invest here and do business and support the region for further growth. So that's one data point. The other data point is later that month, I had a conversation with an emerging market-based investor who is looking into $1 billion investment or more in one of the countries in Southeast Asia, but he made it a condition that the power he would be getting would be green, which was met by silence on the counterparty because that power wasn't available. And they couldn't understand why anyone would want this, and yet that was a hard condition for this investor to make billion-dollar investments. And mind you, this was not an investor from the US or the European Union, but this was an emerging market investor themselves. So I think what we're seeing here is both the potential and the challenge. The potential, the willingness to do things is there. However, the reality is behind where it should be and could be.
So actually on this point, because I think everybody talks about big numbers, or when we talk about financing infrastructure gap or energy transition gap, people talk about trillions. I mean, I would love if the volume of business that we can do in the next 3 years is of that magnitude, because it would keep us even busier than we are. We are busy, but it would certainly triple the size of the team. But from your perspective, really, where is the real constraint, right? Because I echo your point. I think there are countries who believe that because they have built enough power, maybe fossil fuel, type of power capacity, they are fine. But as you said, there are global investors that when they build a new data center or they look for a gigafactory or even a standard manufacturing process, they have made commitment to the shareholder and stakeholders that they want green energy. So what do you think are the main stumbling block? Why is not happening at scale yet?
So I mean, just to put a number to this, I checked this morning, I think last year the world has added 473,000 megawatts of renewable energy. I think Southeast Asia is about 1,000th of that. So I think it's less than 500 megawatt. So that tells you a little bit where in the transition this part of the world is for now. And I agree with you, the pull is there. I think increasingly it comes from the customer side, whether it's data centers, whether it's manufacturers that are demanding greener energy and are willing to pay for it. When it comes to the obstacles, I would say the main obstacles are there's a certain technology lock-in. You alluded to this. There was a lot of coal thermal capacity that was added, including added in the last 5 to 10 years, which is slightly perplexing because I think the stranded acid risk should have been already on people's minds at the time. But you basically added a lot of that capacity that is now presenting a carbon lock-in because those assets would run for another 20, 30 years easily without being replaced. And replacing them will be expensive. So that's one issue. The second issue is the lack of grid integration. So if you look at what has really worked in favor for the European Union was the fact that they had an integrated energy grid. So if the sun is shining in one country and not all the electricity is needed, some of the electricity can easily be exported to a neighboring country, and the neighboring country could reciprocate when the wind was blowing, and they had wind farms. And essentially what it allowed the whole region to do was integrate and benefit from its slightly different geological and weather patterns. When you look at Southeast Asia, not only do you not have an integrated grid, you actually sometimes have countries that don't even have one national grid. Whether it's Indonesia that has like very, multiple grids, the Bali-Java grid, the Sumatra grid, the Kalimantan grid, and then lots and lots of smaller grids. And then of course, even the Philippines, same story with the Luzon grid and the Mindanao grid. So what you don't have is this ability to sort of trade the electricity to make full use of it. I think that's a second impediment. I think the third one would be around the topic of political willingness to push the agenda. And I think here we're seeing positive changes. I think we're seeing Singapore making a great step forward by basically introducing carbon pricing. We're seeing the Japanese following perhaps a little bit more the American model of subsidizing renewable energy investments in order to kind of kickstart an industry. And we're seeing Korea and others sort of following in that. We also see, of course, India and China providing good examples of how the energy transition can happen. So I think that part of the equation is changing positively. And by the way, the grid integration is also something that I think has been identified and is being worked on.
Well, I think nobody wants to talk about grid because it's the most boring part of the discussion. When people talk about energy, renewable energy, I mean, the grid is very much a technical point. Often within government control. There's no privatization of or equitization of these assets, and that in a way sometimes it's reflected. But you mentioned Singapore. Singapore has a high level of affordability in a way because it puts security and it puts reliability of green power in priority. And I think some of the importation projects, which were also mentioned by the minister the other day, are a great example of a form of integration. Although are dedicated grids, but they are a very real opportunity happening. But what about the cost? Because frankly, one of the big issues of transition is always when things are expensive and you are in a country where the affordability may not be as much as in some of the countries you mentioned, then there is a political problem, right? It's a difficult decision to put on consumers, certain prices. So who should be paying and where? Because now we are talking about blended finance, and one of my beliefs is that one of the role of blended finance, whether it's philanthropic or multilateral or government, richer government into government that into countries that need to grow. How do you see that opportunity coming together, and what are the economics?
So I think there may be 2 to 3 fundamental questions that you have to answer to yourself. So one is, how are you going to internalize the externalities from the energy sector? I think we all agree that there is a negative externality created by carbon emissions. And then the question is, how do you internalize it? And ideally, how do you remove it? How do you remove those unwanted emissions, right? And you can do this eventually by replacing energy, carbon emitting sector through, by a sector that doesn't. But ultimately, you want those costs reflected. And that will mean that the costs will have to change, right? So the idea that you would have a sector that has very, very low costs and fully reflects the externalities may not be a realistic expectation. The second question, fundamentally, you have to ask yourself, so what do I do with my existing assets? How do I deal with stranded assets? How do I deal with asset obsolescence? And then you have to ask yourself, how do I want to pay for this? Exactly as you mentioned. Now there are different models. In the case of the European Union, they decided, or let's say it should be the consumers paying for it. Then you can decide within a country whether you want it to be the households, or whether you want it to be the industry, or whether you want it to be everybody who pays for it. But that's a question that each country would have to answer for itself. And then there's a question: what do you do with the obsolete assets? And if you look at the different countries of the world, I think what we have seen in many cases is there's creative destruction. So whether it's in the European Union, where you had a lot of assets that are no longer viable financially, that were just switched off prematurely and basically written off balance sheets, resulting in billion-dollar losses. We saw the same in Latin America now playing out in Chile. So you see this kind of, if you like, creative destruction taking place. And in all these cases, the governments have decided to not step in and not to, if you like, bail out the sector. So now the question then would ask, what should we expect here for Southeast Asia? Do we expect those very countries that have essentially accepted creative destruction and asset losses in their own markets, do we expect them to step up to avoid the same from happening in Southeast Asia? And my answer is, I would not expect that to be the case. If I were to put myself in the head of a donor, and we're talking donors here, what they typically want to achieve with their money is they want to maybe buy down the cost of achieving what they want to achieve. They want to pay for something that they want to see. So they don't mind helping with building a new solar plant, or helping with building a new wind farm, or maybe helping with subsidizing a battery storage component. I see the willingness to embark on this far higher than, let's say, going to a coal-fired asset and saying, I'm paying for shutting this down. So that's just a general statement. Now, specifically, what can blended finance do? The way I see it is actually less to answer the big question, like who pays for all of this. I think the bigger question is what it can do is it can reduce and mitigate some of the risks that you have in energy transitions. Every time you have an energy transition, you have first of a kind projects. You're going to be doing the first, I don't know, hybrid solar wind battery project in country X or country Y. Will it work together with the grid? Will it use a technology combination that hasn't been used before? How will the contract look like? There's a lot of firsts in that. And for that, I see blended finance to come in and say, look, this is a risk that we're happy to take, so that banks like SMBC and others who are very, very capable of financing those projects can come in and comfortably commit their capital.
I think there are two aspects which I totally agree. I think one is often the capital is there, it just needs to be channeled with the right risk mitigation. And I think I definitely see IFC and the World Bank being one of the key players in that space. And I think you recently also announced a potential revamp of your guarantee schemes, etc. So I think World Bank, I can see a sort of renew effort, right, in trying to tackle the climate challenge. But again, I think the blended finance, the power of blended finance is also to bring really capital that in a way has a much lower return threshold, both on the equity side and the debt side together. So I think something that we really look forward and we want to do more with the people like yourselves. In summary, right, what do you think IFC or bank like SMBC it can do more to fast track?
Look, I think what we can do is, together we can continue showing governments the viability of renewable energy, helping them to think through contractual structures. We see that there are some differences to the thermal structures, which this region has fully understood and is one of the most effective and efficient in the world at deploying private capital for this. But how do you translate that model into renewables is a slightly different question. I think we can help with this. I think the World Bank Group can help with this. I mean, I'll give you an example. The World Bank itself is looking at ways to fund the grid in Indonesia to make it basically ready to accept more renewable energy. Because the grid is a constraint too. It's a technical constraint. You can remove it. So there are things we can do that are basically just enabling the market. And then there are things we can do to basically showcase projects. If we've done one or two projects that work, we're giving an example.
I think it's very, very powerful. So thank you, and thanks everybody for listening. Maybe I just want to summarize the session and thank Eric again for being here, and also to IFC and the World Bank to really putting more resources in Singapore and into the region. I think it is, this is not just something that we has an appeal because it's the right thing to do, or because shareholders and stakeholders do ask a private company, a multilateral, to do this. It's also a business opportunity. It's a very substantial opportunity, and we do see a lot of interest coming into this part of the world from global investors. So we hope forum like this really help to facilitate this deployment of capital in a much faster way than it has been done so far. So thanks everybody for joining, and enjoy the rest of the day and the FAST conference. Thank you.